All right, well, Joe, welcome to the February edition of the Mortgage Update with Mike and Joe.
Yeah,
How are you today?
I'm good. I mean, a little disappointed that we aren't celebrating right now.
I know.
Obviously, we haven't recorded since the loss
Right.
in the championship game to the Chiefs, but it was kind of refreshing to see them get their butts kicked.
That, to say the least.
Yeah.
To say the least. That was a good old-fashioned taken out to the woodshed
Yeah.
moment. Sorry for all the Chief fans that are out
Oh, right,
there,
right.
but I'm just calling it spade a spade.
Yeah.
on that.
I mean, so we're into the off season now for
Yeah,
us for
yeah.
no more football talk for a little while. We got the draft in a couple months, I guess.
Right.
But
That's always fun. But we got March Madness.
March Madness is right around the corner.
We got, basketball season, college basketball is obviously very popular time. I actually love March because, you start off with March Madness, which, Joe, we're going to be obviously having a really cool event for our realtors.
Yep.
Maybe let's just step there and kind of give everybody that's listening right now just kind of what we're planning on doing and what to look forward to.
Yeah, so we've done this for the last couple of years, and it's a great charity event.
Mm-hmm.
Our loan officers get to form a team of their agents,
Mm-hmm.
and those agents complete a bracket, a NCAA bracket,
Right.
and then the team that has the best bracket gets to have a donation go out to the charity of their choice.
Okay.
And there's some prizes along the way.
Great.
So it's a fun event. We've been doing it for, I think, 2 years now.
Sure. Yeah.
I think this is our third year
Third
going
year,
into
yep.
it, and it's been fun to watch the different winners and also get the charities some money as well.
That's great. And again, to our friends down in Syracuse, I know that SU has been, playing hard, but not winning as many games as they would like. That being said, they're obviously going to have a chance to, if they can do super well and potentially win the ACC tournament, would put that an automatic bid.
Right.
It's a big ask, but you never know. So we're rooting for SU to come down the stretch strong. So shifting gears, Joe, to the market. It's hard to believe it's already February 12th. Obviously, we're approaching Valentine's Day. But obviously, to talk about the market starting here in the greater Rochester area, I know you've got some stats to share, but I guess it just feels like the same song. Can you kind of share some details on that?
It's interesting. The January data was interesting, when I looked at it. So Monroe and surrounding counties, the average list price went down from $239 to $233, not a big drop.
Mm-hmm.
We finished the month averaging 7.86% over ask, which was down from 9.31. That's Monroe and surrounding. When we look at the composition of the volume, there was 21% of the business, 16 government transactions in the month.
That's a big increase.
It's a big increase from we were at 10% the previous month. And then if we just kind of zoom in on Monroe County by itself, average list price down from 255 to 244.
Mm-hmm.
We saw an increase in the percent over ask from 8.63 to 10.73. And same thing, you would think with that more competition, you'd have less government volume, but we actually went up we had 4 contracts, government contracts in Monroe County in December. We had 12 in January. So saw an increase there. Now, let's talk about tale of two cities here, right?
Mm-hmm.
So shifting down to Onondaga and surrounding, I think this may be, and I got to go back and look, for the first time, average under ask in Onondaga and surrounding, in Onondaga by itself. Not a big, 2% under in Onondaga and surrounding, and 2.69 under in Onondaga by itself. I think that may be the first time since we started tracking this data that we were under. Right? We've been kind of pretty close to zero in some months, but I think seeing that under was interesting. Government volume, 15 transactions. So in Onondaga and surrounding, that made up 51% of our transactions were government, and 47% in Onondaga by itself. So.
Well, I think that's, on one hand, obviously it sounds like it's a little softer, but on the same hand, having those government buyers that have been shut out for so long because the market's been so tight, I think that's at least good news for those people that are probably first-time home buyers, don't have as much cash.
Taking advantage of the grants.
Right, exactly. That's huge. So today, Joe, was obviously a big day for rates.
Yep.
Obviously, today was the latest read on CPI, which, for those who obviously came out a little hotter than expected, did have some impact on rates. What was your take on what was released this morning?
Yeah, I mean, the numbers came out in a 0.5% up, 3% year over year. So, the Fed has said from the beginning their target's 2%. So we did see a little bit of an uptick in the monthly and then the year over year. Rates did react, right? We saw the 10-year jump up. The good news is the 10-year has been retreating for the last couple of weeks.
Right.
I think we were up 10 basis points to 4.63 this morning,
right.
From the 4.5 where we started. So, there's going to be a little bit of an impact, but we have seen rates kind of trickle down over the last couple of weeks too, which has been encouraging.
Right.
There's so much going on right now in the political world.
Yeah.
If we put inflation aside, I mean, the expectation, even Jerome Powell when he spoke yesterday, right, the Fed's going to be patient in their cuts, and they're going to be hesitant to cut. So this just kind of furthers that. Okay, they're going to take longer to cut. I don't think anybody was really expecting a ton of cuts this year as we got closer into the year. But there is so much going on the political front that
it's
there's
hard
going
to
to be
keep
some
track of.
volatility.
Yeah, it's hard to keep track of. I think they need to wait and see how that's all going to settle in.
Yeah.
Because right now there's a lot of moving parts.
Yeah, absolutely.
Well. So more to come on that. And again, just a reminder for everybody that's listening. Every week, Joe puts out an email that really does kind of two key things. Gives you a current update on where mortgage rates are at. And then in addition to that, highlights a GRB product and program. So that's the Monday Minute that we send out. And if you're not receiving that, let us know, because it's a great piece and it'll keep you really current. So, Joe, a few weeks ago, we had the annual MBA forum that talked about the national and the local economy. Great turnout. What, over 400?
Over 400 people, showed up. I think we had 450-ish registered. All in all, that's been a great event year over year since we rolled it back out. It's a good event to get everybody together, start the year off right. We had Marina Walsh from the National MBA came in and spoke. Kind of gave her overview on where rates are headed. It was a lot of what we've been sharing.
No real
right?
surprises.
No surprises. We don't expect rates to drop. I think we've gotten beyond. We've been living in the 6.5% to 7.5% range for the last 2 years, basically.
Right.
And I don't think there's any real change coming to that. We may dip down into the 6s, back up into the 7s as we've been seeing this yo-yo kind of happen. We need a pretty significant economic event to happen in order to see probably rates drop significantly, like we saw when the rates rose significantly.
Right.
So, I think she echoed that message of, hey, it's going to be a lot of the same for the next couple of years. Then we had Jim Yockel gave his update on the GRAR. Just what the state of inventory looks like, which I joked with Jim. He's pretty negative when he talks about the real estate market, but rightfully so.
He's factual. He's factual.
Yeah, he's factual. I think there is a real threat to inventory that we live and breathe every day, and what's driving this competition on the houses, et cetera, that we're seeing. So that was good. And then we had our panel, which you were an esteemed guest on. We had Senator Pam Helming. We had Ryan Davis from Ontario County that is involved in economic development, and then Jim was on the panel as well.
Right.
So some good insight into local laws and things that are being put forward to try and make changes and try and create some affordability and some inventory.
Yeah. So to that end, Joe, and as you know, we're having an event later tonight with the Women's Council of Realtors in Syracuse. So for our colleagues and friends down there, one of the things that we're going to be talking about with them is that, can this event, this forum that you guys did here in Rochester, can that be replicated in Syracuse? Because there's a lot going on there. Obviously, down the next few years as they really try to prepare for this Micron expansion. I think some of the topics that we talked about certainly travel well to Syracuse, and getting the right audience in that room, I think, would be helpful. So we're looking forward to talking to them about that as well.
Yeah.
So shifting gears to obviously getting buyers prepared for the market.
Yeah, I mean, we talked a little bit about we're heading in our off season here with football, right? And so we kind of put a little comparison together of, getting ready to enter the housing market is kind of like running in, a football team.
Yeah.
If you're the general manager of a football team, you're evaluating draft picks, who's free agents out there, you're making trades, et cetera, to build your team, right? Mm-hmm. And I think that's as a buyer, you want to build your team to align yourself for success. Mm-hmm. And when we talk about that team, what does that team consist of? It consists of your real estate agent, right? Mm-hmm. Who are you picking to represent you in the transaction, to help you find the home of your dreams, to be your advocate, and really guide you through the process. And we say this all the time. We eat, sleep, breathe real estate, right? Mm-hmm. Mortgage, real estate, we could have conversations in our sleep about it.
Right.
But for a lot of people, they do that once or twice in their life, right? Mm-hmm. And, we see it a lot too. Hey, the last time I bought a house was 30 years ago. Okay, well, think of how much has changed in 30 years in the real estate and mortgage business. So clients are often taken back of, why do I need to provide this much documentation? What is all this stuff needed for? Because when they did their mortgage last time, it might have been on a handshake. So, really taking the time to align yourself with the right team members is very important.
Right.
And then it's kind of, working with your team to position yourself, right? What's the strategy you're going to use? Are you going to get pre-approved? Are you going to use the cash plus, or do you have the funds to do a guarantee on the house? Can you cover any appraisal gaps? Working with that strategy to prepare yourself for when you're ready to make that offer on the house, right? And then making the right calls under pressure, right? A lot of times, you see clients see a house on a Saturday, offers are due on Tuesday. It's not a long window to really decide, do I want to make the biggest financial decision of my life?
Right.
So a lot of times they're under pressure in doing that. How can we help alleviate some of that? So some of the things that we do, particularly our loan officers, if you are thinking about writing on that house, let's talk to an appraiser. Let's get an idea of the value in the neighborhood. Mm-hmm. What does it look like?
What are comps
there out there, so that when you're making that offer, you're prepared, right? You're prepared to say, okay, there may be a gap, and I'm prepared to cover it, and this is what it means to me, right? Really understanding that, taking the time to learn that, so that you can make those decisions and work closely with the loan officer in doing so.
Right.
And then, now you get the offer accepted, right? Now you're managing the process, right? You got to get through underwriting, get your docs in, get everything submitted, get your loan cleared to close, get ready to close, get the call from the attorney. Go get the money from the bank so you can bring it to closing. All those things that go into it, just having those right people in your corner, right? Because I think it's important to have the right real estate agent. We always say, talk to the bank early, make sure you're qualified. Don't, get yourself excited about a house that maybe you can't qualify for, right? Let's get that out of the way so that what's your price range, what's your price point, what's the market like, because we're able to share some of that data. So that, again, to try and make that process smooth. It, for the last 4 years, has been very difficult to buy a house.
Right. And I think, Joe, you bring up some really good points. I think, too, for those realtors that are listening right now, one, again, obviously we've been talking about, helping the buyers prepare. If you're working with a seller, one of the things that, that Joe, you've been tracking, I think you're probably going in your 4th year of tracking the sales by zip code that shows, by month, so that as you're sitting down and talking to prospective sellers, debating whether they should list their house or not, is these trends that we see in regards to, houses being sold in the spring or the early spring relative to the summer months. There are better times than others to list your house. So looking at this data that you can share, I think, is super important. Outside of that, going back to your comments regarding buyers, my only kind of, I guess, plea, if you will, to the realtors, again, that are listening right now, is to basically help us help you. And what I mean by that is really at the moment you start to work with a buyer and you refer them hopefully over to GRB, is we can provide you with all of the the checklist and whatnot of the documents that are needed that your buyer is going to need to provide. It's so much better than just provide all that up front so that we can get them pre-approved. We have a myriad of pre-approval programs. And if we can do that, it's just going to put their buyer in a much better position to win. I mean, Joe, you track the percentage of transactions that we do each month that started with some level of pre-approval. What's that range look like?
All last year was 20%. 20% of our transactions started as a cash plus a pre-approval, right?
Right.
And when you think about that process for the customer, right, we get the hard part out of the way. Let's get the underwriting done, get it out of the way so that when that contract comes in, maybe you need to update a pay stub or a bank statement, but there's not going to be any surprises. There's not going to be any gotchas that come up all of a sudden. Oh, there was a prior foreclosure, or we didn't use the right percentage on the student loans, right? That's all done because it's going through underwriting up front. And so what we found is those deals go through a lot quicker and smoother than the transactions that don't get pre-underwritten or looked at up front, just because, you know, that vetting is already done. The timeline cuts down, right? We're able to turn things even faster than what our normal turn times are. So, you know, that piece of it is important for sure.
Yeah. So Joe, let's kind of, as we kind of close this, let's really kind of clearly, and again, I'm going to really kind of pause here and talk very deliberately on clarifying our Cash Plus program and our Cash Guarantee program to ensure that there's no confusion. There's a clear understanding of what it is, how it works, the strength of it. I think all of our programs, not just Cash Plus, Cash Guarantee, I think is really important to start with the premise that these programs are not, certainly, Joe, you and I, in terms of working with our team, we help create these programs. We administer these programs. We're responsible for managing these programs. But let's not be remiss that these programs are backed by the strength of GRB as a financial institution, which is a $1.2 billion bank that has been around now for 27 years. So there is integrity and financial strength behind what we do. So I think it's important for people to understand the credibility of what we're putting out there and the institution that's backing it as well.
Right. Yeah. I mean, I think there are misconceptions on our program, right? There are misconceptions on our Cash Plus Guarantee. And we will buy the house. Our goal is not to buy real estate. We don't want to be an investor in real estate. However, because we're reviewing these buyers up front, we're pre-underwriting them, we're making sure they're qualified. We are saying, if this buyer does not close on the house, GRB will come in and buy it.
Right. So
at the contract price.
At the contract price. And I think that's something that we want to just reinforce. Now, Joe, you brought up a great point. We're not in the business. I mean, we want to help buyers get into homes. We want to help sellers sell their property. But this messaging that we're sharing is that when a listing agent is evaluating offers, which I'm certain, I know there's a sequence that they go through, which includes certainly price, and then obviously, terms. If there's questions regarding the appraisal, is there an appraisal guarantee? And then in the event that the buyer doesn't perform, is the lender going to step in to ensure that the transaction does close? And we do all those things.
Correct.
And I think it's important that realtors really don't just accept the offer based on just one or two of those components, but to really, and I'm sure they do, but is to review it all in totality for their client. And I know that if anybody ever has any questions regarding our programs, I know they can call you.
My name and number is right on the letter.
Is right on the letter. So we want to make certain that we're really, really clear on this point, and at the expense of kind of giving everybody a heads up that this message, Joe, that you and I are sharing right now, we're going to be repeating it redundantly. so that there's really no confusion around it and people know the strength and the confidence that they can have in these programs.
Yeah, and just to, I want to run through kind of what the process looks like, because it took us a while to
Sure.
come to market with this. And, part of the concern was, how do we ensure, our buyers are covered, right? And so when we rolled this out, we said, okay, not only are we going to pre-underwrite these loans, right? So borrower comes in, they get pre-underwritten, they get approved. Now it's time to write an offer. When they go to write that offer, the loan officer is involved. So the loan officer sends the borrower an agreement to sign, property specific. So we're saying, okay, what's the address on the property you're going to write? I'm going to write on 123 Main Street. Great. We plug that in our system. That goes to the buyer to sign that agreement. We also take that address and we send it to our appraisal management company and have an appraiser go in and validate, hey, this is where they're thinking on writing on this house. What do the comps tell us, right? Where do the comps say, what do they tell us from the value is concerned?
Right.
Now, when we sign off on that offer or sign off on that cash guarantee letter, which I sign off on, I review that stuff. Hey, was this looked at? Okay, does the borrower have enough cash? If this thing appraised at the list price, does the buyer have enough cash to cover that gap? And we're vetting all that stuff out, and the buyer in their agreement agrees to cover any appraisal gap. Now, they also agree to put a 20% earnest money deposit. They can then do a 5% down loan, right? They don't have to do 20% down on their loan.
They could gift from their parents, or as an example.
Correct. Okay. However, that deposit is the collateral to keep them engaged in the transaction.
Right.
That deposit is actually held by our bank attorney, right? So that's a common mistake we see when these offers are written. So the loan officer knows, hey, Block and Longo is going to represent the buyer in this transaction. They're going to represent the bank. When they write that earnest money deposit section, they're going to say earnest money deposit to be held by Block and Longo. And again, they're holding that in their trust account. And so that trust account is at GRB. And so they're able to, that money's in the bank in case anything were to happen. We have that collateral for our guarantee. And so that helps us helped us to get everybody comfortable with, hey, if we're doing these, this is the process that we go through when they get done. Now, there are other programs out there that aren't pre-underwritten, right? So the question as an agent that you want to ask yourself is, do you want your buyer putting 20% of their money on the line if they don't know if they qualify for the mortgage, right? And I'm not saying that, a loan officer didn't review it, but, there sometimes mistakes happen, right? And so, those buyers are putting their deposit on the line, saying, hey, if I don't buy it, the bank's going to buy it for me. You're taking a risk, right? So when those buyers do that, do they want to cover themselves by knowing their financing is fully guaranteed because they've been pre-underwritten already, or do they want to take their chance on?
I think, Joe, to that point, and I think there's a misconception out there that this takes a long time, to do this. The reality is it doesn't. The client, provides us with the docs,
which they're going to have to provide anyway.
Anyways, and we see every day, again, this is kind of sharing a little bit around how we run our business, but every day there is a report that comes out that provides a list of those loans that are being reviewed that day. And on that report, it includes those cash plus guarantee loans that need to be reviewed, not only that day, but by what time.
Right.
Because we're asking questions around what do these offers do, so that we can prioritize the work so that cash plus guarantee letter is issued prior to those times when those offers are due. So we're very time sensitive around this. And I think, to your point, the protections and the comfort that it gives to your buyer, I think is going to elevate their entire experience.
Yeah, absolutely. And Mike, I have my underwriting authority.
Yep.
There's times where I'm logged in on a Sunday, reviewing a cash plus guarantee because offers are due at 9 a.m. on Monday morning. Right. So, we do what it takes to get them through.
Right.
And so, that is the misconception. That the program takes so long. I can't wait that long.
Right.
Give us a chance.
Right.
We'll get it done.
Exactly. So again, just for everybody that's, listen, I know we spent a lot of time, talking about this, but Joe, you and I know how important this is. I know how hard you and your team worked to, first of all, bring this program to the table and now to administer. We take a lot of pride in the work and the product that we produce. And one of the things that we'll probably do more often as we move forward is to really kind of share real life success stories. Not only on this podcast, but through all of our social channels, just so that I think people can see the real life outcomes, the success stories, the wins that people have with not just this, with a lot of the programs that we offer as well. So Joe, with that, obviously we'll wrap up just kind of, letting everybody know that obviously as we go through this year, we welcome your feedback on topics that you want to have discussed. 2025, I think is going to be, I'm excited about it, but I think it's going to be a little bit of a whirlwind as we navigate things. But GRB is here for you. We're excited, to partner with you. And with that, we wish everybody a happy Valentine's Day.
Right. Don't forget to like and subscribe.
And don't forget to like and subscribe. All right. See ya.